Hello, friends, clients, and colleagues. It's Rich Siegel with ARQ Wealth.
This is Justin Rivera out of the Denver office at ARQ Wealth.
Hey, Justin Rivera. Thanks for joining the video crew. Today is about 4 o'clock Arizona time on Friday. Hope everyone has a good weekend. You can see here our disclaimer language, and we're going to do a brief market update. We've had lots of turbulence and volatility, and there's been some interesting events occurring. So we're going to talk about that. So Justin, has the great rotation begun?
Great rotation, value into growth, small caps into large caps. I don't know. I think that based on what we've seen over the last week or two, that we're starting to see things that we've talked about leading up to this point, which is that large caps seem overvalued, especially against some of these other undervalued asset classes, and that's starting to show in the performance these last few weeks. I mean, it's just a few weeks over the when we've seen months and months and even years of outperformance on the other side. So I don't know if we can say it's begun, or maybe we can, but it's hopefully not over.
Yeah. Yeah, I agree. Let's talk about value versus growth. And we all know those value sectors, the boring stuff, utilities, financials, industrials, materials, and then the growth is more of the flashy names everyone's been hearing about lately, like Nvidia, of course, and the mega cap or Mag 7, Googles and Facebook, Metas of the world, et cetera. So this is a chart. I'll hit on this, and then Justin could add more color. This is just a chart. We started this at the beginning of the quarter, July 1st, through yesterday. And what you'll notice here is that the blue line, the big winner, is the small cap index. Pretty interesting, huh, Justin?
Yeah, I mean, like I said before, it's we haven't seen this in a little while, and again, like this strong a performance in just 2.5 weeks is it's something that we've thought it was coming, and it's nice to see it, but hopefully it's just starting, and we get to see some more of this broadening out of market performance.
Yeah, I agree. What I've seen in my career is that small caps are very explosive in fits and starts. The highs are higher and the lows are lower. You can see here that just for 2.5 weeks or so, that the small cap benchmark is up over 7%. The S&P 500, which is loaded, actually the top 10 stocks are it's like 38% of the index is in 10 stocks now.
Yeah,
It's been a laggard, right? And you also notice that large cap value, the orange line, is outperforming the S&P. That would be mostly like oil stocks and consumer staples, and then even foreign developed markets, Europe and Japan. So, what do you think that is, Justin? What do you think is causing the recent shift?
well, I think that one, we've talked about the concentration, we've talked about the stretched valuations enough. We don't need to beat that horse again, but that's a big mean reversion kind of tailwind for performance of underappreciated, unloved areas in the market to catch up to the overappreciated parts of it. But also, economic metrics are coming in the way that we hoped to see them in order to get cuts, Fed rate cuts. Small caps have tended to like and perform better during periods where we are seeing a probability of a cut, and especially multiple cuts. And so that's kind of a tailwind again for seeing the small caps start to catch up with their performance with the large cap sector.
Right. And then just to kind of add on to that, if you think about it, a lot of these gigantic companies are flush with cash. Smaller companies need leverage, they need capital to continue operations. And if the cost of capital, because rates are so high, is expensive, obviously, if rates come down, the cost of capital is cheaper and the profitability then becomes greater for these smaller companies.
Yep, absolutely.
What's also kind of interesting here from our friends at First Trust is it seems like if you look back 45 years or so over the last 11 presidential elections, and obviously this is not a guarantee, but it does seem like it's a trend. We'll see what happens in the latter half of this year, but it does appear that 6 months after a presidential election, consistently, every single time in the last 11 or so, that value stocks tend to outperform growth stocks. And I guess possibly it's the promise of new administration and their policies for growth and infrastructure and kind of rebuilding the country. So, this is the case, and Justin, we are a little bit in favor of the value stocks, right? Our asset allocations reflect that.
Yeah, and I think that what's important to note is that there's different types of analysis, right? There's fundamental analysis, there's technical analysis, trends of how things perform during certain periods of time. That's more on the technical side, but we like value for the fundamental aspects of it. So this is nice to see. It doesn't make our decision for us, but it's nice to see that there's a little bit more of a tailwind than we even needed to make our tilts into value.
Totally agree. Earnings season is underway for Q2. And so far, so good. 64 companies out of the 500 S&P companies have reported thus far. It's only 13%. And 81% are beating their earnings estimates. And the beat is by 4% on average, whereas only 16% of the companies reporting are missing, and that's only by minus 2%. So profitability remains strong, and I would say the vast majority of companies are exceeding their own expectations. I think a great scenario, and I'm not sure this is going to play out, but if it all plays out this way, it would look great. Is we see a pullback in the market, which may have already begun here. I think we're down about 2% or 3% in some cases over just the last couple of days. If we see a correction of 5 or 10% and earnings are going up, that's a really nice setup into the end of the year, right, Justin? Wouldn't you agree?
Yeah, I think that when we talk about valuations, the ratio that we talk about a lot is price to earnings, right? If we can get even just one of those to go the right direction, we see valuations come they come down, right? So if P goes down, price goes down, that's going to affect that. If E or earnings goes up, it's going to affect it as well. If we can get both at the same time, Goldilocks scenario right there.
Right. All right. Well, we will cross our fingers, and we do expect a little bit more volatility here in the next couple of weeks as we head into the summer months, which are usually not the best months for the market anyway. And crossing our fingers for a good end to the quarter. Thanks for listening, and have a great weekend.